Hi everyone. When I used to be in my 20s, I myself and many of my friends used to say, why should we save money too much? Why should we do all that? There is a lot of time left. Let's have fun in life. Now, when I entered 30s and 40s, there were friends of mine who had said, like, no, it's too late to start investing. I'm already 40. What am I going to do? What difference will it make anyway if I start investing now? But the point is, it's never too late to start investing. I'm going to tell you a story today of one of the most successful investor of 20th century. He's not a household name like Warren Buffett. Many of you wouldn't have heard about this investor who made it to the Forbes list starting at the age of 38. He started investing at the age of 38 with a princely sum of 50,000 at that point of time. I'm talking about 1947-48 time frame, and he started with a princely sum of 50,000 at that point of time. But that's not the point. Let's not worry about catch up on what that amount translates to today. But let's take absolutely the number in absolute terms. So he started with 50,000 at the age of 38, and he went on to multiply that money close to 18,000 times. And over the next 4 decades, he lived till 88 or something, I don't know, 90 or something. And that's the important part there is over the next 4 decades, over the next 40 years, he multiplied the money into close to $1 billion. Okay, so his name is Shelby Davis, and his sons also went on to become successful investors later point of time. But let's see what Mr. Davis did very differently. And how could he even start at the age of 38 with 50k and getting to that kind of a level of becoming almost a billionaire? Now, if you really study, there's a book, this is all based on a book, famous book on him. It's called The Davis Dynasty. And I have that book, and it's also, there is another book called Davis Discipline in Amazon. I got the Davis Discipline, but it tells you the story of what he did. Now, he was a bureaucrat, and he lived in the last century. And what he did is, he decided to become a full-time investor, leaving out his job, at the age of 38, as I said. And this was in the year 1947, right? Almost 80 years back. And in 1952, Davis became a millionaire. That is, after he started investing with 50k, he already multiplied it 20 times over next 5 years. So you can understand what kind of a prolific investor he is, right? Next 5 years, 20 times, he's become a millionaire. This is his path towards the successful investing over the 40-year period. Now, the key milestones, right? So in 1975, his net worth touched $50 million. And in between, what happened was, so he became a millionaire at 1952. Then after almost 23 years, right, he only multiplied that 1 million into 50 times. In 23 years, 50 times is great returns, but comparing to what he did in first 5 years, it's okay. What happened was, in between, he took up a job in Switzerland as an ambassador, American ambassador towards and he was staying in Switzerland. And he came back in 1975, after the service. And this year 1975, when he came back, the market had crashed. And his net worth had crashed from $50 million down to $20 million. So he lost $30 million in that crash, huge crash, right? And this is that period was similar to what we have now, high inflation, high interest rates, stagflationary environment, banks were collapsing, the S&L crisis, savings and loan crisis, and all were going on during that period. And this was the time when market crashed, and interest rates were priced up almost up to 20%, right? The Fed funds rate. So that was a period, and he lost $30 million. Now look at the next 13 years, from 1975 to 1988. The next 13 years, he went up. His net worth multiplied by 40 times. So it went up from 20 million to 800 million. So he was back in US, fully focused on investing back again. So look at the difference. When he was fully focusing into investing, he multiplied 40 times in a matter of 13 years. That is a stellar returns by any means, right? So in 13 years, if money has to multiply 40 times, it would just mean that it's compounding more than 30%, right? Now put together all of this from 1947 over the next 40 years to 1988 approximately. In 1988, he entered into the Forbes list of richest Americans, and he left $900 million when he died in 1994. Now, first 40 years of investing career, he multiplied his money close to 18,000 times over 40 years, and that's a CAGR, that is compounded annual growth rate, of 25%. He outbet Warren Buffett by miles, because 5% difference over 40-year period compounding. Trust me, it's a huge difference, right? And Buffett himself was big success, compounding at 19%, 20%. But this person was, he remained off the news, he remained off the media and all of that during those times. Even Buffett came to the limelight when he was 55 or something. So what is a winning secret? What are the key takeaways we can, based on what I learned from the book, what Shelby Davis did right? What are things he did right? Well, the first thing is he stuck to a circle of competence. He invested only in insurance sector, mainly in insurance sector. So when he started in 1947, he found that this insurance sector was in a way too underpriced, right? And nobody wanted to enter in the market. Insurance was completely untouched, boring, fragmented industry. Nobody wanted to touch. It was a slow growth industry and priced way too cheap because nobody was looking into it. And when Shelby entered, his domain strength was insurance, and he started focusing on insurance sector. He was a first mover into the industry when nobody touched it. So that is advantage. When there's a sunrise industry and which is priced at super cheap valuation, then you have hit a jackpot, right? That's what exactly he found when he started. And that's why the first 5 years he was in the right place, the right time. When he started investing, he saw that opportunity. That's why he switched the job and moved into the investing full time, focused on learning the companies in insurance sector, bet on the best ones out there, right? And stayed with them. In first 5 years, he multiplied it 20 times, right? And he continued to do that. He didn't change or enhance the circle of competence. Almost he remained in the financial sector and insurance sector. In 1960s or somewhere, he sold the US companies and he moved into the Japanese insurance sector when he saw that as a sunrise sector in Japan. When Japan was booming insurance, he bet on the Japanese insurance sector, which caused his money go up significantly 30-40 times in the next 20 years. So he bet on the rising sunrise industries when it was avoided or it was untouched by most of the investors. Now he bought growth stocks at bargain prices. That is a terrific combination. If you can get that, then you have found the next billion-dollar path, I would say. Now, what is a long-term investing style? Davis called these stocks as compounding machines, and he let the winners ride for long. These are quotes, these things are told by his son, whose name is also Davis Shelby in the book. And so his son is narrating the whole story, and the son is also a famous investor, and he was managing a fund. Now here are two snapshots, what we can learn from this book, right? So this says, this is the time when he started investing, right, in 1947. He says, Davis devised various rules of thumb to compensate for this and other anomalies. The typical insurers he discovered was for selling less than the book value. The bonds and mortgages held in its fixed income portfolio were worth far more than the market price of the company's own share. That means the companies were underpriced. The book value was trading much lower, right? It is like the holdings of the company, insurance company, which means the insurance companies will have holdings in bonds and mortgages and all the securities. The holdings itself was much larger than the market capitalization. So there was the way too much money to be made, and he found that opportunity and he went into the insurance group of companies. Now the other chapter snapshot I've taken here is something we have to learn which is applicable now in 2023. Out of crisis, I've underlined this, when Davis started the firm, he wrote, out of crisis comes opportunity. Shelby remembers him saying, a down market lets you buy more shares in great companies at favorable prices. If you know what you're doing, you will make most of your money from these periods. You just won't realize it until much later. So the bear markets are your best friends to buy stocks, because you can buy these stocks at much cheaper prices, quality companies at much cheaper prices, and you keep doing that over long periods of time. When you keep buying at bargain prices, great companies, doing it for a long periods of time is bound to make you rich, super rich in that aspect. And that's precisely what Shelby Davis did. And if I would recommend reading his book if you want to get into the finer details. It's a great read. And he talks about a lot about patience as well. Patience is a given, because somebody has done it 40 years, just shows his temperament. So that's the lesson that we can learn from Shelby Davis. Thought of bringing this. People are waiting outside the fence thinking it's too late, too early. There is never a timing in the market. Just get inside, start investing. Even at the age of 38, when you start with 100k today, or 50k, or 10k, or even 5k, you could well be a millionaire or multi-millionaire, whatever. It doesn't matter after a certain amount, like beyond a 5 million, 10 million. The what do I call it? The diminishing utility theory, right? So beyond a point, it doesn't make much big difference. So that's what I wanted to bring up. Trust this was helpful. Thanks for staying with me. Signing off, Sandeep, Anand.